Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao. It's 1 p.m. on your clock. It's time to get you that commodities update that we bring you on a daily basis. Joining me in conversation today is Mr. Ajay Kedia from Kedia Advisory. Great to have you on board, Ajay.
Good afternoon.
Let's talk about gold first and foremost. It has seen a good recovery given the pullback in US dollar. But is that the only factor at play, or are there more triggers that are propelling the up move in gold prices?
See, I think last week was the panic situation for all bullion. We have seen dollar index yesterday made a high of 20 years on the 20 years high around 110, but slight pullback has been seen. But last week we have seen gold prices went below 1700 level mark after the hawkish statement what we have seen in Jackson Hole speech from the Fed chairman. We are also expecting in September meet there could be a possibility of 0.5 to 0.75 rate hike, which is creating pressure on gold. But on the flip side, if we see since last 6 months, we have never seen gold prices went below 1680 level. Almost three times we have tested that level, but market has failed to breach that level. I think going with the going on geopolitical tension or COVID concern from China, ECB is also trying to go with the interest rate hike, which can definitely create pressure on dollar. What we have seen today. So I think overall the panic situation was there in last week, but now things have been covering up. Domestic demand has been slowly and steadily improving. No doubt our import for August is not so much lucrative, but I think going forward with the festival season, physical demand should be picking up as the prices has fallen. So I expect 1700 is getting a very good support right now, and prices can continue to hold this level. Can you come up? I can't hear your voice.
I'm sorry, I meant to ask you at this point in time, are traders and investors buying into gold, or are they still awaiting more commentary and guidance from central banks world over to get a sense of how they plan to combat inflation and what's likely to happen in the next few months?
Surely, whenever there is a geopolitical tension or whatever the environment, we generally see gold prices outperform with other asset class. Like in 2008, also we have seen after global market crisis, we have seen gold prices initially for 6 month period was underperforming, but after that, gold has rallied very well till April 2011. Similar kind of fashion we are expecting this time also, but this time unique thing was the food inflation. We have already seen the shortages because of food inflation was shoot up, and that is why there was some delay in gold gains. But looking to the Fed speech in September, I think only zero point 0.5 or 0.75, I think, is the maximum thing has been left with the Fed for inflation in order to control the inflation. So I think after the zero point 0.5 or 0.75 rate hike, nothing much will be left with the Fed, and that could trigger a fresh buying for bullion. So already the things has been discounted. So downside would be really limited to 1680, we can say. But on higher side, after the Fed meet, we can see the prices can zoom up around the 1756 or 1770 in international. Whereas on domestic side, rupee weakness is continuously supporting gold on domestic side. So maybe again we can light around 51,500 to 52,000 till Diwali. So overall, I am very much hopeful after the Fed meet minutes, we can see a good bounce in bullion again.
Okay, all right. But what about Indian consumption, especially if you look at India's gold imports in August? They have halved on a year-on-year basis. Is it because of the weakening rupee again and once again at play, or is it the overall demand which looks muted?
See, whenever we compare YOY data, we are generally more surprised with this data. See, last year in August, post-pandemic demand was there in the market. That is why we have seen the import of 121 tons. But actually, if we see, average import in India is around 60 to 70 tons, which is normal what we have seen in the August month. but definitely we have seen some changes in the festive or wedding season demand. And this year also, I think number of weddings in India is too high. So import would be continue, consumption would be continue, but definitely the figure what we have seen in August is slightly as compared to last year, it's been slightly dropping, but I think it's in the line of average only. And as we know, quarter four is the maximum number of marriages in India. So consumption is expected to increase. You can see the premiums are right now $2 high as compared to international market, which shows slowly and steadily demand has been improving and prices are adjusting with the demand.
Right, and it's not just the yellow metal or precious metals, in fact, but even base metals have seen a good rebound. Talk to us about what are the factors responsible here, and more importantly, do you expect this up move to sustain, or will the trend largely be sort of range bound for most of these base metals?
See, for base metal, I think we need a steroids to keep this pace continue, because already we have seen prices has moved from 880, like copper is a barometer for all base metal. From 880, we have seen 620, and recently last week we have seen a good rally towards 685. That was because China was came up with a stimulus to the market, supporting at every part. That has supported all base metal. Even energy crisis in China and Europe has supported because production has damped down. So overall, I expect there will be a limited upside, because still the recession fear is going on for global market. We have already seen China's factory activity has contracted. Some sort of support has been seen from service sector and all, but still economy situation is not so much active, which can support base metal. No doubt, production cut down, lower inventory, or we can say some sort of demand from lower side has been supporting. But on the other side, we have seen dollar index gain towards the 20 years high. Consumption is not picking up. China is still suffering from the COVID lockdown. So all this make base metal to trade in a very broader range only. No doubt, after the last week fall, we can see some sort of support in case of copper, zinc, and aluminum, but upside would be really limited.
Okay, but between zinc, copper, and even aluminum for that matter, which one has, or even other base metals, which one has outperformed, or which one is showing most resilience right now, and from a trading standpoint, perhaps looks more attractive?
See, on trading point of view, we can see zinc, because last week we have seen all of a sudden there was a sharp fall in the zinc prices from 320 to almost 284, 285. And already we have seen global zinc market has seen a deficit of 1400 tons in June. And because of energy crisis, what we have seen in China and Europe will definitely support the zinc prices. So I am more bullish on zinc, because after this correction, the current level of 284, 285 would be the good level to accumulate zinc. But upside would be depend upon the how the demand will proceed from here. But
Hmm.
anyhow, we can see a bounce towards 300, 305 in next one period.
Okay, then zinc it is that perhaps looks the strongest for from a trading and buying standpoint at the current levels. Ajay, thank you so much for chatting with us and talking to us about what's aiding this uptick in gold prices as well as key base metals and what's the way forward for both. With that, we're going to wrap it up today. Thank you for tuning in. We'll be back again tomorrow at 1 o'clock with a fresh new update on commodities.